What is a breakup structure? Okay, I'm back again. I'm getting more consistent now with the trading videos because I did one a few days ago. So we're getting back into routine. I'm gonna go through what breakup structure is, how I view it. So we're gonna go straight on, no fucking about. So I found this example on gold. This was I think it was just before the weekend closure. So on breakup structure. So as you can see here, we're in a downtrend. So making lower lows, lower highs. So up, down, up, down, up, down. And in the downtrend, you want to be paying attention to the highs, to the lower highs. So, for example, we'll mark it out. So here, go on here, and you want to be doing it from the wick. So obviously, if you don't know what a high is, it's a green candle followed by a red candle. Green, then red. So easy. So you see here how you see these two highs here, and you see that, oh look, price went above them. That's not a breakup structure. That's where price went. But if the candle does not close above the high, then it's not a breakup structure. And yet, as you can see, we continue going down, and then we got a bit paying attention to these ones, and it's always the most recent ones. You see, this one was matched, not a breakup structure. So we got one here as well. So this is what I would class as a breakup structure. So we see a green candle, then a red candle. That's a high. That is a lower high. And we see the breakup structure is actually this candle here. Even though this is also a high, but it's the most recent one. So it's not when the candle closes above this high, it's when the candle closes above this high. But with breakup structures, it's better to get more prominent highs. So, for example, I'd rather see a breakup structure above something looking more like this. But technically, this is a lower high, so structure has been broken. And you want to pay attention as well. So, with breakup structure or market structure shifts, however you want to call them, it's better to have a longer and more a stronger green candle. That's when you know that there's been a displacement and the market structure has shifted to bullish. So a candle this big, but even though this was not a breakup structure, this one was. This one's still okay, but if you've got a candle like this, it's better to wait for more confirmation. So you wait, see what happens, then a bigger one closes, then you know you can enter. So if you wanted to just enter off a breakup structure, so say you wanted to enter here after candle closes, then I mean here is not it's not great risk to reward here unless you're using really small position size because you have to go and go low. So it's not the best. So you wouldn't want to just enter a breakup structure, in my opinion, depending on whereabouts it is. But again, you can see price did continue higher and it went up to there. So after you can see clearly after this candle here, after the structure had broken, price continues going up. So again, that's proof of it. But you want to mix it with something else as well. So we'll have a look down here. So okay, we can see a fair value gap here. So I'll mark this one out. So obviously we know with the the bullish fair value gaps, you know that price will likely fill it and then reverse or continue as this is actually a continuation compromise. So obviously this one we saw a reaction of bang goes up, but then obviously it wasn't enough to really push it because the furthest fair value gaps are usually the strongest ones. So we see price gets into this, doesn't completely fill it, it gets to down here, but to be honest, they don't always get filled. Usually they come back later for retracement. So we see it gets filled, and then from there, because you have that marked out, you see, okay, price has just tapped into it, Now I'm looking for a break of structure. So we wait. Obviously, this is a 15-minute, but this would be on a smaller time frame usually. And then you see break of structure, bang, and then you look for entry. So you either enter there, or if you wanna, go into shit, I just lost where I was now. Okay, if you want to go into a smaller time frame, that's also okay. But I mean, you can go into a smaller time frame, but obviously we see a break of structure here. But obviously, high time frame, multi-power. So you want to see a 15-minute break of structure, and then you go to a lower time frame to see if it all aligns. So I mean, this is just the way I think of it, and I think it works pretty well like this. Um, I mean, it's as simple as that, but you obviously want to be mixing it with something else as well, because a break structure on its own is not strong enough, because bang, you get a small one like this, and that's, don't get me wrong, that would have been a good trade. Obviously if you mixed it with something else, but you want to mix it with like a fair value gap. So obviously here would have been a good one, because bang, fair value gap, then straight away you start looking for entries. You see a break of structure, okay, cool, you enter, and then bang. I mean, personally, well, here would have been a good one. So I would have probably waited, gone on to a lower time frame, and then see, okay, it's consolidating a little bit. I'm going to wait for a more prominent break of structure. So you see how I was saying earlier about the longer green candles. This one, close, enter there, and then I probably would have had. Okay, so we'll enter there. I probably would have had stop loss underneath there. But hold on. The thing is for me with stop losses is that I don't like to have them too close to here, because a lot of the time market will do like a little liquidity grab and it will go further, and then it's more risky. Usually I like to have it below a confluence, so you see how there's a bullish fair value gap here, then I know that, okay, price could fill that, and then bang, continue upwards. But I mean, if it gets so low, then your idea is basically invalidated anyway. So, but yeah, this would have been a good trade. But this is just simple. It's so simple. Um, break of structure, and this is the simplest way I can describe it. If you watch someone else's video, whoever else you like watching, like ICT stuff like that, then they'll give you a much better explanation on why it works that way, how it works, and everything about it. Because I'm just explaining it how it is, so you know what to look for, and you know what when it's invalid, when it's not valid. So it's just a basic explanation, but that's going to be the end of the video, because it's just a quick one. It's so simple. Let me know what you want to see next, what complements, like what SMT divergence, support and resistance, supply and demand, anything I'll make a video on. Obviously I'm not the most experienced trader, so it's probably better to be learning from someone else, but I do know some shit. So if this can help someone, then fantastic. If not, then it is what it is. But that's going to be the end of the video, so I'll see you later. Like, comment and subscribe, and comment what you want to see next if you are interested, and subscribe if you want to keep getting trading videos. I'll see you in the next one.